Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is February 20th, 2012, doing another session of LiveCharts, going over your stocks, my stocks, and the markets in general. Well, we got a pullback today. Lo and behold, who thought the market was capable of that? We still haven't seen a pullback larger than 5%. Actually, we haven't really seen a pullback that has been more than like 3% since November or October, November time period. So the market has just been on a complete tear. This little minor pullback is basically all we've gotten out of this market in terms of a sustained pullback. On this particular day, we went from 1447 all the way down to 1402, which is basically a little more than 3%. More than 5%, though, has not occurred since October, November. And that really does feel like a distant memory at this point. And the thing is, too, is it seems like the market's wanting to drift higher. It just sort of lollygagging higher, not really out of conviction, but more out of like that's all it can do. It definitely is determined not to pull back substantially, that's for sure. But once that mindset shifts and the dip buyers leave the market, that's where you're going to see the sustained pullback and where we'll start getting net short on this market. On this 5-minute chart, I'm going to go ahead and look at the 5 and the 30-minute chart as well, and maybe even throw in the weekly. On the 5-minute sustained pullback, we look like we're putting in a base right now. The FOMC minutes came out in the last 20 or so minutes, and you can see we had a sharp sell-off, which created new lows and a pop higher, then a sell-off, and now we might be stabilizing basically at the base of today's trading. That takes us into 3 o'clock, and whether or not we can really rally into the close, I'm not overly confident. However, in order to get this market rallying, all we really need to do is break above 15.2550, and what you'll have then at that point is a confirmed double bottom in this market, and so that should lead to a rally if that happens. Otherwise, my best bet is that we're probably going to just lag into the close here or sell off pretty hard. And when I say hard, relative to what we've seen of late, not 15-20 points, hard, but 2 or 3 points more. Let's see. Let's look at the 30-minute chart here. You can see the base forming a little bit better. Crazy looking candle. Just not a huge sell-off though in the grand scheme of things. But the problem is that individual stocks are getting hit by the weakness because of the move that we're seeing today relative to the previous moves that we've seen to the downside. And then on the weekly chart, not much has changed. We are actually up for the 8th straight week. Doesn't happen all that much. You can see we haven't done it in quite some time, but it's similar to what we saw back in early January of 2012 is what we're seeing here in early January 2012 through mid-February here. In fact, it's almost a replica of it outside of this one week where we finished slightly bearish in 2012 back in the 2nd week of February. Channels are very similar to what we saw from June till September. Here you have the same thing going on from November to present. Let's look at some commodities here real quick. Silver, just taking a beating of late. I think this one's starting to look extremely bearish. You had the double top here that formed. You had the channel that was actually broken out to the upside. So you would have thought, just looking at the weekly chart here, that this thing had a lot more room to go. But going back to the daily, you can see that despite breaking that upward channel, which did last for a good while, we've pulled back and we've put in consecutive lower highs. So just to illustrate that, I'll draw what I'm talking about. It's not a perfect trend line, but you can see nonetheless what you're dealing with. And today is a bit of a game changer for silver, as it could be bouncing off of this lower channel here. So if you really believe that this commodity is going to bounce, let me get rid of some of these lines here too. You can see I've drawn all over it in the past, but if this ETF is going to bounce, it needs to do it now, and it's showing some signs of that today with we've got it perfectly tested the lower channel level there, and and if it's going to bounce, it needs to do it pretty soon here. You got some multiple gaps to fill. We were down 4 straight days where you've seen it go from almost $30 down to mid 27s. I actually like the silver idea as a bounce play, so I'm going to add that to my long positions. I'm not a big ETF trader, but I'm not completely dead set against it. Gold looks much more bearish. Let's see if we have even any support levels that are trying to come into play here. I mean, you got a little bit of support where it's currently at. Once again, I need to get rid of some of these lines I've drawn all over the stock, but it's not a perfect support level, as we've dipped below it before in the past on multiple occasions. But you can see there is some buying strength there at that 151, 152 price level. And then let's look at the dollar, because usually the dollar moves opposite of these, and likewise the dollar's moving higher. You got the double bottom, nice solid support at the 2150 level, pushing higher today, almost a full percent, which is quite remarkable. So this isn't a full-on bullish breakout, so that means it's things like the euro should drop in sympathy with the rising dollar. So that's definitely a bullish chart for the dollar, particularly today where you have it breaking out. Probably the best way to trade the dollar is using like a leveraged ETF, like a 2x, just simply because the dollar doesn't move. Like, this is a big day for the dollar, and it's only up 0.7%. And typically, too, the market rises when the euro rises. The market falls when the dollar goes up. So this is actually somewhat of a bearish signal for the market as well. Which brings us to our current holdings, EXP. We got stopped out of this one today at 64.50. Or 65.50. Yeah, 64.50. I don't regret taking that a little bit early. We would have been stopped out nonetheless. I just saw it as an opportunity to mitigate some of the losses on this trade. It's frustrating because what you had here was a perfect breakout, and one of the better charts that I had seen in a while, and it did what it was supposed to do on the initial onset. And this isn't one of these pump and dump stocks that go up for a momentary period of time and then just sells off. It's not like that. I mean, it's heavily traded and good market cap to it, but you don't see these a whole lot where you just get this solid breakout pattern, a continuation the following day, and then it's the heavy sell-off. A lot of that was due to the news that came out yesterday about one of the housing reports that came in below expectations. So that has fueled this stock's fire, which you can't really do much about. We took the loss. We lost 2% on the trade. Not a heavy loss by any means. Very easily recovered. But we need more of a market really to be able to gain any momentum. Right now, this market just continues to trade sideways. The bursts that you get to the upside last for about 15 minutes, and it encompasses the majority of that day's move. And then what you basically get from there on out is just sideways consolidation. So it is frustrating, but I'm starting to get to the point where I want to curb some of my long exposure, particularly with what we've seen in the share planner reversal indicator, some of the other indicators that I follow. I posted the Piker trader indicator this morning or early this afternoon, showing that the market's overbought and that there's reason to be very skeptical of further price movement in this market, and a myriad of other ones. Just it's an overbought market, and there's reason to be skeptical about further price appreciation. So while the market hasn't said sell everything you have and go completely short, we still have to talk about what the market is showing us, and that takes us back to the S&P. We're still trading above the 10-day moving average. We're still got an uptrend that's still intact. We have a short-term trend line that's intact. When I draw this trend line here, it's been playing that one like a fiddle. You have a longer-term trend line that's still in place that has support around 1480. So there's a myriad of things that's still holding this market up, and that means that there's still a good chance that this market gets its act together, that we see another leg higher. But what we have to be prepared for is when things like the short-term trend line here is broken, when the 10-day moving average is broken, to start curbing some of that long exposure, adding some short exposure, and basically going with the ebbs and flows of the market. As the market gets more bearish, we get more bearish. As it gets more bullish, we get more bullish. And that's how you successfully trade in the market. When the market's a raging bull market, that's not the time to get bearish all of a sudden. I know that's things that these contrarians love to promote and everything else, but that's the recipe for disaster too, unless you have some proven method to show that back tested it does work. That's the only way to try to be a contrarian. Otherwise, while it feels bearish today, while the market's feeling very sluggish, there's no real support levels that are being broken on any kind of time frame, on any kind of scale. There's patterns that are emerging that give reason for pause. There's a 10-day moving average that is close to being broken. There's a short-term trend line that's close to being broken, but they haven't broken yet. And so while it's okay to maybe add a short position to the portfolio, to just go ahead and say, we're going to sell all of our long positions and get net short, that's how you really screw yourself. So here's the thing. I could be wrong about having 3 long positions currently open, all right? And if I'm wrong, I'm going to be wrong on those 3 long positions, all right? Or I could sell all those and take a loss on them now. Some of them would be a profit. But I could sell all of them now and then get short, and then the market takes off. And then not only did I take a loss on those long positions, but I also took a loss on the short positions too, because I got out of the longs and got net short. That's what I don't want to do. That's why I let the market sort of show me where it wants to go. And until it does, that's how I trade. I trade with the direction of the market. Yeah, we're getting a pullback today, but I'm not going to let it scare me into getting into a net short portfolio. All right, I'm running out of time here, but I want to go ahead and knock out some more of these charts that you guys have sent my way. LOPE, great breakout. We had discussed this one before, that if it got above the 28 or the 2487, 2490 level, that would make for a good breakout. It's done that to a pretty respectable degree. It broke out. It wasn't the cleanest of ones. You had a initial pullback the same day that it broke back. Or that's a movie, right? Not my favorite movie. And that's an understatement. But after it broke out, it pulled back to a existing trend line, and then it soared and did pretty good. I mean, there was opportunity for about 6-7% on that trade to be made. We didn't take that trade, but you know, if it pulls back, there's definitely a reason to consider getting long on it again at around, say, 25-ish. So see if it pulls back another 4% or so, and then we can reevaluate whether we want to get long at that point. It needs to be a steady pullback, nothing, you know, hardcore. DPZ, I love food stocks simply because I start envisioning their food in particular, but let's see, Domino's Pizza. Good looking trend line in place here. Pull back. I gotta say, this one could be worth taking to the long side. If you know, it's only tested this trend line, this would be the 3rd time it tests, which means that this isn't all that of a mature trend line. You have some sub trend lines in place that are breaking today, obviously, but this longer term one off of the July lows has only been tested for the 3rd time, and I would suspect that it holds. So there is a good risk reward opportunity here, as you can put your stop loss at 44.24 and get in at 45.41 where it's currently trading at, and only risk about 2.5% on the trade. I like that trade. If things start looking a little bit better, I might buy this one off of the bounce. CHUY. Good looking bull flag here as well. This is one I can go ahead and add to my watch list. The only problem is it's only been trading since July of last year, so there's not a lot of price history, but there is a bull flag there that's respectable and that could be traded off of. I'd say once it breaks through that bull flag, that's where you probably want to get long at, which would currently sit at about a break of the day's highs. So a break of the day's highs, say 29.60. If it hits that level, that's where you'd want to get long at. Below that, it's a pretty volatile thing. That's the only problem I'm seeing with this one. I would not trade it simply because I can't get a good feel for where to put a stop loss at. It needs to show me a better level of support that I can stick my price level under. Otherwise, I risk getting stopped out far too prematurely on it. NSM, we'll do 2 more here, and then I got some more that we can do on Friday as well. NSM, another stock that's having a pullback to an existing trend line, and that's what we're seeing in a lot of stocks right now. You know, whether they're breaking out or whether they're trending higher, they're all pulling back to some common support levels, trend lines, etc. The only thing I see wrong in this one is a bearish wedge, which would automatically scare me into getting into the trade. So the wedge is pointing higher. That is usually bearish, because while it might be trending higher, it's not making strong higher highs. So that means that there's an underlying weakness that might not be seen by the eye, but once you start drawing some of these lines, you can see that the weakness is there. So I would only look at this from a short perspective of 37.50 is where I'd want to get short at. Tell you what the stop loss is, I can't really at this point. You may be able to make it go of 40.16, but I'd rather see some more price action develop before I come to a conclusion on that. Let's do one more. RMD. Somewhat of a trend line in place. Usually almost always a trend line of some kind on stocks. Not all of them, but it's just whether or not, you know, they provide an edge in your trading. It's tested it on 3 other occasions besides today and yesterday. I don't see this as a stock that I really want to get long on. It seems a little lackadaisical. You have this bearish island reversal pattern here, which indicates that there could be more downside. So I'd say it probably makes for a better short setup than a long setup if this trend line can get violated. All right, folks, that's going to do it for now. If you guys have any questions, feel free to hit me up in the splash zone. I'm there all day, or you can email me at ryan@shareplanner.com. Also, be sure to subscribe to my YouTube channel, because there's constantly new videos being put on there like this one, and you can be always alerted when a new video is posted. Share Planner channel is YouTube/StozTrader, STOZTRADER, and that's how you can get us there. All right, folks, y'all take care, and God bless y'all.